Today in the crypto space, we're seeing a bit of negativity throughout the market. Bitcoin down approximately 1.5%, below the $67,000 mark, and Ethereum down approximately 2.5%. Definitely coming down to those lower levels and dragging some of the altcoins down with it. We have AVAX, Doge, Solana, Cardano, and many others coming down to slightly lower levels. In today's video, I want to talk about the general market. I want to use Bitcoin as a leading indicator, but more importantly, I want to talk about one project that is looking pretty good given the bullish divergence, and that project is called Dynex. So you know what? Let's talk about the news, let's analyze the charts, and let's strategize to capitalize. Welcome to the channel. My name is Mike, and let's get right into it, guys. If you're new to the channel, welcome. On the channel, we talk about cryptocurrency, Bitcoin, Ethereum, and all the altcoins. Looking for opportunities, whether we go up or down, bearish or bullish, it doesn't matter. All we want to do is stay one step ahead of the market so that we can capitalize on any of the volatility. And if you appreciate the strategy, subscribe to the channel, click the bell so you don't miss out on any of my future videos, including the live streams at 7:30 Eastern, where we talk about crypto news and price action. Guys, if you have any projects you want me to cover here on the channel, feel free to let me know in the comment section below. You can hit me up on the socials. The links are in the description. And better yet, guys, join the Discord. The Discord is where it's at. Lots of good alpha, trade setups, fundamentals, and learning material. The best part is it's absolutely free. All right, guys, let's begin. Let's see what's going on here with the general market first. We'll kind of scrape through the top 100, get an overall feel of what's been happening in the last little while. And then we'll take a look at Bitcoin as a leading indicator. And then, of course, we'll look at Dynex to see if we have an opportunity there to be buying the dip. All right, let's take a look at this. What's going on here? Market cap kind of going sideways here. Not much, new capital entering the market. Trading volume did make a nice higher high here, a low in comparison to the previous high. So a nice break of the local high. That's not bad. We come down, make a higher low, not bad. We come back up, make a higher high. Maybe we, get a trend to the upside where we are increasing volume little by little, market participation getting involved. That's a good sign, of course, to see the market cap grow and obviously to see a bit of volatility in the to the upside in the next little while. Bitcoin, taking a bit of a dip in the last little bit. It's down approximately 4.5%, give or take, in the last 24 hours. However, guys, the market in general is doing okay still. We have to understand that structure has not been really been broken big picture. I know that we made a lower low here on Bitcoin, but this is a local low, very local low. So, of course, it doesn't look good if we come back up and make a lower high because we already made this lower low. So, maybe some individuals on lower time frames might consider this a bit of a trend reversal. However, guys, big picture, we're still okay on Bitcoin. Ethereum, in my opinion, is right now doing much, much better. Let's refresh this page real quick to make sure everything's up to date. Yeah, but Ethereum is doing a lot better in the sense that it's not dipping down so hard. You can see that it's slow grinding to the upside, which is good. Solana took a bit of a dip, 5% to the downside, but all good, right? Like still trending to the upside. Didn't break below the previous low, so no change of character or anything like that to worry about at the current moment. BNB looking okay, still broke up below the previous low. So we're seeing some of the larger cap altcoins show a bit of weakness, but nothing too concerning. And then all of a sudden you have XRP, although it's only up 2.7%, what we got to appreciate is the fact while the market is coming down a bit, XRP is number one showing strength, and number two, it's attempting to break character in the sense that it's been kind of like sideways within a channel for a good while, and as we speak we're seeing that XRP might be looking to break above the channel. Now until we do that, we have to understand the tops of the channel are resistance, as they have been for many times, right? So we have to consider that taking risk at that level is quite risky in the sense that you become a breakout trader. So be careful, although I'm very bullish right now on the fact that XRP is looking to do that. However, there's still the bearish case scenario in the sense that what about if we get a rejection on those tops, given that the market is showing a bit of weakness here. Okay, so be careful there. What else do we have there? We have Tron rolling over a little bit. I like to see Tron strong because a lot of people use Tron to trade their stables. It's one of the most common networks to trade stables on. So that's something that I consider. Bitcoin Cash had a nice run up in the last little while. So did Litecoin, and they're getting a bit of a pullback. Chainlink kind of going sideways, Polkadot going sideways, Near Protocol not doing much. You can see that a lot of the market right now is showing a bit of weakness, but still okay, right? Still okay because it didn't make a lower low here. Caspa still showing strength, guys. Slow grind to the upside. Is it going to get a breakout? Imagine if the market momentum-wise fully resets, right? You get this negative momentum out of the way, then all of a sudden we get positive momentum coming in because we know the market works in peaks and valleys, and Caspa's holding steady, waiting for that to happen. So basically, unless Caspa actually comes down any day now, reality, it's neutralizing all that possible negativity. And when it's time for the bullishness to come in, Caspa's already propped up, ready to go. This is what's quite interesting when you see bullish projects neutralizing negative momentum. So this is actually quite bullish as long as we maintain this type of price action showing strength. It's up 1% while the market is coming down. Look at ICP down 4%, and you can see the rest of the market kind of getting a bit of negativity. What else do we have here? 2% to the downside. Stacks coming down based on Bitcoin narrative, of course. 7.5%. It's almost like a bit of a leverage play on Bitcoin. So understand that it's going to take more of a dip than Bitcoin does. But then on the relief rally to the upside, or a break to higher levels, we'll see stacks show some strength for sure. What else do we have here? Render and the rest. Look at all these kind of going sideways, dipping down, slumping to the downside. Not a good look, but still okay, guys. Still nothing major to worry about. Thorchain doing okay. I know it's down 4%, but if you think about it, look at the structure, higher highs and higher lows. Just because right now it's on a low of the structure, it's still a higher low. What about if we get a bounce and go for another higher high? And this is something that we have to consider. Look at Aave grinding to the upside. So it's not bad. It's not like the market is absolutely dumping, right? We even have Brett looking pretty good. If you think about it, it's down 3.3%, but it's still trending clearly to the upside, getting some relief to the upside, maybe going for another higher high. These are things that we need to consider. It's not just about the percentages. It's about the structure within the price action, because we know that we have peaks and valleys, and if we're going to be going long, we got to get in on the valley and take profits on the peak. So is this the buy the dip opportunity that we could have here, to see another little impulsive move to the upside, maybe get into a short-term trade, a quick scalp or something like that? We have Book of Memes bomb doing really good, 7% to the upside, eCash doing okay, and that's about it, guys. The market is a little bit slumpy, kind of sideways, a few good gainers, a few dips, but really very indecisive, very indecisive market. All right, guys, I know you're here to talk about charts, so let's begin. Let's take a look at Bitcoin real quick. Then we'll take a look at Dynex. DNX is the ticker. What's going on here with Bitcoin? Bitcoin at the end of the day is still maintaining that divergence type of feel right into here. We got class A bearish divergence. We came up for a double top. I'm going to exclude the wicks because that will help us with the divergence. And then ultimately the question is, do we get a bigger rollover where we come back and officially, come down to this thick white line where we backtest the previous high, the breakout point for support? If we can get that to happen, that's the confirmation low that we need. And then all of a sudden, quick move to the upside and potentially get to about 72K. Now, what about if we come back to the bottom of the range? What about if we come down to lower levels? All of that is very possible, but as long as we are above this thick white line and we close candles above it, guys, I have to remain bullish. Here we are, remaining bullish. All right, guys, let's continue here. What else? Let's get into this a bit in a bit more detail. Honestly, it's about being patient here with Bitcoin. We have to be patient here because, it could be going sideways. We could get a nice structural support right into here, a nice bull flag after, a bit of divergence. Maybe it's doing exactly what XRP is doing in the sense that it is neutralizing negativity instead of getting a massive retracement while the market is getting slumpy, while we see a bit of red, while we see momentum fall. Maybe Bitcoin goes sideways. Maybe Bitcoin goes sideways. It could definitely happen. Let's take a look at momentum here for a second. You can see as volatility pushes down, we're not getting major impulses to the downside. And keep in mind, if you're going to get bearish on Bitcoin right now, volatility is almost fully reset to oversold conditions. And every time that kind of happens, when we get to these levels, we get, the beginning of impulses. We get, greens to the upside. So what we have to understand is it's kind of dangerous right now to get super bearish, because I think in volatility terms, the majority of the move to the downside is pretty much in. Now what we want to see is the bullish response. Once we get oversold, maybe down to this area, we can start looking for long positions to actually see the momentum, the purple line, finally get overbought. Right? We want to see this purple line finally get overbought. And in this zone, when we see the overbought conditions right around here, I'm just going to make it very general. We might see the volatility come down, fine, and then come up to the upside. And when we're trading volatility to the upside and we're trading momentum to the upside, this is where you get the best reward. And keep in mind, when you see the momentum in overbought conditions, that's when you get the best reward. So this is not a bad scenario here, because we got the mean reversion play that we isolated a couple of days ago, actually a few days ago, when we saw this really overextended over the EMA was overextended, and we decided to, basically take it easy here, because what we needed to happen was we needed to see the momentum and the moving average get back together again. Well, guess what, guys? It got back together. Very similar to what happened around this area and around this area. It definitely got back together. So what do we expect? Is the trend going to be our friend? Are we going to continue to get overbought and maybe go for another higher high? We broke above this one very, very slightly. Now, what about if we go up for another one and get really overbought, and to see a nice impulsive move to the upside and hit that 72K level on Bitcoin? So this is what we have to keep in mind, is right now getting into a short or being super bearish. This, by the end of the day, we'll see this come down lower, and then from there we can decide what we're going to be doing to the upside to see some volatility. In the meantime, we could get further continuation down. Okay, this is what we have to endure. This is what we really have to take it, is that we could be seeing a further dip, but the majority of the dip could be over, right? So we have to keep in mind that we could still come down to around this level, which is at about 63K, touch this bottom, get some support and bounce. And then the question is, what happens to altcoins, right? Are altcoins going to bleed out, or at best, are they going to hold steady going sideways? And using Ethereum as a leading indicator at this current moment, Ethereum is outperforming Bitcoin, and we're seeing the Bitcoin dominance fall. And of course, tonight at 7:30 Eastern, we'll be talking about Bitcoin dominance. We'll talk about Ethereum. We'll talk about the next steps forward. So join me live at 7:30 Eastern, where we talk about crypto news and price action. All right, guys, let's begin. Let's take a look at DNX. What's going on with Dynex? In fact, Dynex is doing very, very well. Let's get rid of the oscillators for a second. We'll do a brief here on the price action, because price action is king. At the end of the day, we did some pretty good stuff here, right? We did come down for that lower low. We broke below the horizontal. We fell through the volume gap. We touched the bottom of the volume gap. We got a nice spike to the upside. Best risk to reward ratio was right around this level. And I can imagine that people looked at this consolidation. People looked at the divergence that was in here. And we'll take a look at that in a second. And we got the follow through to the upside, which is great. This was a great take profit opportunity. And if you didn't, no big deal, because I understood that this is where the majority of the people would want to take profit. This was a clear take profit zone. If you didn't take profit right around this level, guys, it's okay. You just got to be able to hold and have those convictions, and perhaps even buy the dip. And the reason why I'm saying that, because after the rejection right around this level, we see that the price did come down for a dip, but it's a higher low at the current moment. It's a higher low in comparison to this low. And when you're getting follow through from a bullish divergence, and then you back test that follow through to confirm this low as an actual low, as the low, by making a higher low, basically what we're looking for next is a higher high. And a higher high could bring the price back up to $1.20. And if that happens, guys, that's when you're going to start taking your take profit, or you're going to start trailing up stop losses. Basically, that's when you're going to start coming up with your defensive strategy to defend your gains, because you've made some gains. You want to take them off the table, consider yourself a profitable trader. And the only way really to do that is to realize those gains and take some profit. Doesn't mean that you have to exit your entire position, but take some profit right around this area. And then you start questioning, well, what kind of profits am I talking about? From this bottom all the way to this level, you're talking about 144%. That's a decent move to the upside, right? Whether you're using leverage or not, it doesn't matter. This is a great move. And if you consider what's happening right here, it's almost like giving us a second opportunity to get in. And I like the fact that it's taking its time here. It looks like a small accumulation range where we're seeing a nice rounded bottom possibly be built. Now, we might be looking for patterns. There could be a suggestion that this is an Adam and Eve pattern. Nice V recovery, if you want to call that a V recovery. Then we come down for a nice rounded bottom type of thing, and it could come up again. So it looks like an Adam and Eve pattern. That's a healthy pattern for a breakout right around this level. We start breaking out, boom, we start moving to the upside. And again, $1.20, $1.30, I would be taking profit or at least trailing up that stop loss. Now, what do we do at this current moment? You guys know I'm not a breakout trader. I buy dips, I buy bottoms, I buy great risk to reward ratios. And if you look at where we are currently, where's your invalidation for a bullish long? Well, it's below this horizontal at about 40 cents, right? So at 40 cents, we want to start saying, you know what, maybe I'll cut my losses. Maybe I'll get out of my positions because we're coming down for a lower low and we don't know how low we're going to go. We can come down to 20 cents. We could come down to much lower levels. If we look at Fibonacci extensions and we start taking the swing low to the swing high, we could come down to the 1.27 to about 20 cents. We can even come down to the 1.618 where we're getting basically down to a 0.06. Do I think we're going to go there, guys? At this current moment, there's nothing in the charts that is going to suggest to me that we're coming down to these levels, right? Unless we break below the invalidation, which once again is at about 40 cents. If we break below 40 cents, yes, these are possibilities. If we stay above 40 cents, guess what, guys? This is a great buy the dip opportunity within the volume gap. We're trying to hold steady as we see. As we see, we're holding a bit of structure. We're building that strength right into this level, and we can clearly put stop losses in two places. One, where the yellow line is, right here, below or right around 46 cents, right around this level. And then obviously another place to put it is at about 40 cents or a little bit lower, about 39.5 cents. Which is not bad of a zone either, because if you think about your risk to reward, it wouldn't be bad. We'll do the setup in a second. Let's take a look at the oscillators. And back to the whole divergent concept. Divergence is doing very well here. And the reason being is even after the follow through and the back test, the divergence is still intact, which is giving you the indication that this is going to pivot, right? So right into here, we're making lower lows and lower highs. Let's exclude the wicks, right? Just to make things very traditional, because that's part of the rules here. You shouldn't be using wicks when you're looking for divergence, but you know what? We'll keep it like that. So we'll include the bodies here, and this will be wicks, but it's obviously a higher low, a higher low type of thing. It's obviously we're making lower lows here. Okay, so basically lower lows all throughout here, stemming from all the way about here, and then all of a sudden you can see the momentum slowly grinding upwards. That's class A bullish divergence. It's the strongest type of divergence that you can see in a chart, which is great. Then all of a sudden we got a bit of a volume spike. We got a good follow through, and guess what? Now we're coming down for the back test. And upon the back test, you're basically, again, you're making that confirmation. But in addition to that, we're respecting the trend reversal, suggesting this bullish divergence, which is really good. So all of a sudden you start questioning, now is this the time to be buying the dip, considering that now we're moving to the upside? Could we get overbought once again? So I'm going to keep this real. At the end of the day, getting into a long position is ideal here. I get it because of risk to reward. But just keep in mind this. The fact is that you're not buying oversold conditions. This was oversold conditions. However, you got no confirmations. So if you got in at this level, great. You got a decent entry. And if you happen to snipe the bottom, great. You got the best entry so far. However, at this level, you got the confirmations. And obviously, you had to pay for some peace of mind. And what you paid was this margin right here, right? This was the margin that you paid. This from this bottom, if you were lucky to catch the bottom, to where we are, this bottom. This is the margin that you pay to get peace of mind, to get the confirmation, to get extra confidence in the fact that, you know what, maybe we are rolling to the upside. Okay, so this is it. Now, in addition to that, there's risk associated because you're not buying oversold conditions. So the risk you're taking is that we break through this and come back to oversold. Okay, that's the risk you take, given the fact that we already got overbought. So why wouldn't we be going sideways here in the chop zone and going overbought again? Oversold. And if we go oversold, it's likely that we see another sweep of the lows. Maybe we still make a higher low. Or maybe a double bottom, and at worst case, another lower low and maintain the divergence, which is very unlikely if that happens. We can invalidate this bullish divergence by making a lower low in the price action. So this is the risk you take. However, given all the other factors, at least you can mitigate that risk with a very, very tight stop loss and a clear risk to reward ratio, putting you in positive in a positive setup, which is good. So keep that in mind. I like this, but this bothers me, the fact that it got overbought already and it might be looking for oversold conditions before it continues to the upside. Okay, so there's always risk associated to trading. There's no trade that is risk-free. Another thing that you should keep in mind is that the volatility is pushing down on the daily. So the orange line is still pushing down, which means that this volatility right into here where it began could begin pushing further down. And again, coming down for a test of the bottoms or even a lower low. Now, if you're going to maintain the confirmation low, if you feel like this is the structure that you want to get into from a bullish perspective, to be honest, it doesn't look bad, because if you start zooming out, where else are we going to go? We're getting that higher low scenario. Guys, this is the time to deploy a bit of capital. I would say, from a bullish thesis perspective, if you get in right now and you put in a stop loss at worst case scenario at this bottom, you get invalidated and you start looking for TPs right around this zone, just to be safe, you're up 84% with your loss, basically a 3.7 to 1 ratio, and your loss is about 22%, where don't forget your gain is 684, which is still not bad. And we're not even near the previous tops. Right? So even if you wanted to say, look, I want to take profit right around here once we start exiting the accumulation range, because we could get rejection and get back into the accumulation range, guys, you're looking at 136%. Then what about the expansion? The actual expansion, getting out of the accumulation range. That's where the real magic happens. The reality is the real magic happens when we get one of these impulsive moves and then start consolidating up here, and we leave a volume gap right into this level. Right? We can put stop losses right into here and accumulate again for another leg up. And that's how we get those, impulsive moves, those Elliott waves, those big expansions to the upside. And we've got positions here at the bottom. Now, just understand, this is obviously a big picture. This is obviously, this artwork here is very over exaggerated, but it's just meant to really resemble what could really happen when we start trending to the upside in a nice, strong bull run, right? So we're waiting for that big rally. We're waiting for the bulls to show strength. And the reality is this could be the beginning of a nice pivot point to see that happen. So where are you going to put your stop loss? It should be down here, and this should be a bigger picture setup. It shouldn't be a short term. Unless you're going to get into a short-term trade, put your stop loss underneath this bottom and exit based on short-term exit points, which you see that you have resistance here, you have resistance right around here, you have volume gaps that suggest lots of emotional zones where I would be quick to take profits and put myself at least break even once we get to these levels. But it's all about this setup. In the meantime, again, we could come down to these levels, we can touch the double bottom, and I would put that stop loss with a bit of wiggle room right around 38.6 cents and see what happens, and obviously take those profits once we reach the tops. Guys, we've done pretty well here. Let's take a look at the trend oscillator here for a second. And we can see on the daily, it's looking pretty good. Look at the divergences we've been getting. Look at the EMAs, a nice position to the upside, green histogram bars. We're trying to get into the bullish control zone. We got a divergence on all of the expansions. The expansions are slowly, the bearish expansions are slowly getting weaker, similar to what happened here right around this phase, right? And then all of a sudden, boom, we start getting the big move to the upside. So what about another big move? Could that be in the works where we start seeing a nice big green expansion to the upside any moment now where we can take some profit? Guys, if I've offered you any value in this video, do the channel a massive favor, slap the like button. It does really help out with the algorithm. If you want to follow me on the socials, feel free to check out the links in the description. Join the Discord. The Discord is where it's at. Lots of good alpha, trade setups, fundamentals, and learning material. Guys, see you tonight, 7:30 Eastern, where we talk about crypto news and price action. Take care, have a good one, and don't forget, buy the dip.